So we have the RSI and higher than the number 50. The options that we are going to see in stocks particularly, they will be monthly expiry options. So if we have a hourly trigger, and welcome to our YouTube page. As you would remember from our previous videos about directional based option strategies, you would see that we had discussed earlier how we can leverage options to get higher benefits from a bull call spread if we have a bullish position, bullish analysis, and from a bear call spread, for example, or from a bear put spread if we have a bearish position. So today we are going to see how Keeve can help you deploy indicator-based automated directional option strategies. So we'll first log in, and from login, let's make a strategy first. So the strategy that I'm going to show you today is something that firstly I want to have the benefit of both the directional momentum, directional move of the stock as well as the momentum of the stock. So one of the few directional indicators could be the super trend, and one of the few, let's say, the momentum indicators could be RSI. So we'll start with by naming the strategy. I'll use RSI and super trend. So I'll just put a small strategy name, and I want exposure to both the position, long and short. The interval would be a bit higher because we are going to do options today, and because the options that we are going to see in stocks particularly, they will be monthly expiry options. So if we have a hourly trigger, then it would be easier for us as the trigger would be less, the noise would be less, and at the same time, the options that are going to be deployed are not going to be deployed again and again. So we'll just use the candlestick. The buy would be for super trend that crosses below the super trend. If the super trend crosses below, that means the momentum is going up. The super trend crosses below the close of the candle, and we'll add one more, that will be RSI. But it is important to see that I'll show you once that the RSI doesn't cross above. Wheel place is higher than, because if we put cross above, then it is very rare that the two conditions that RSI crosses above 30, for example, and at the same time the super trend also crosses above. The momentum and the directional based signals are not always together. So we need the momentum signal to already be active, so that when we have a directional trigger, we enter the trade properly. So we have the RSI and higher than the number 50 super trend. So we'll take super trend for our, so we'll again take super trend and RSI for our strategy. RSI crosses above close on addition chart, and super trend crosses above close, and RSI crosses below 60, because 70, after it crosses above 70, there are many indications when it comes below 70 again, but then again crosses above. So I think 60 is a better number for a strategy. We'll see from the backtest as well whether this strategy is making sense. Then I don't really want to stop loss and take profit, so I'll just put 100 here. So because we want to deploy our strategy in options, we'll have to select the future symbols. So let's take TCS for example. We'll take the TCS June, the IndusInd for, because we'll have to see whether the strategy is making sense in all different industries or not, or if it is making sense in only a particular stocks. So we'll also take Infi to get more exposure into the IT. We'll take Asian Paints. We'll take Ultratech, the cement industry, and we'll also take exposure to Titan, for example. So now we are going to take a delivery portion here, and we are going to backtest it, let's say, for a year. Now let's wait and see the backtest results. So as you can see that the TCS portion did not give higher returns, but at the same time IndusInd, Infosys, Asian Paints and others have given a good return. So here to see how we will deploy a directional based option strategy, let's take an example of Infosys. So here we'll click on run live, because if we want to execute the strategy quickly, then we'll select an interval. How much time do you want this strategy to be in motion? That whenever in the next 10 days from today, whenever the trigger comes, the option would be deployed. Now we'll see how the options would be done. So here we want the ATM of the options to be based on the futures, because we are selecting futures right now. We don't want to roll over because of this monthly strategy. Only for the next month or this month strategy we're going to deploy it. So let's say if you want to deploy a bull call spread for a buy position, you will first select add leg and add another leg here, and you want both calls here. So if you remember bull call spread properly, then you will remember that we buy the ATM and we sell the OTM. So here we'll sell the OTM, let's say 2 OTM. So if, for example, we are choosing, so for example, if we choose Infosys or Asian Paints, so if Infosys price is around 1700 and the indicator has given a buy signal to us, then we will buy 1700 call, and then we'll sell 2 OTM, uh, sell 2 OTM call. So that would be 1700 call buy and 1740 or 1760 call sell based on the strike prices. And for example, for even similar for the put spread. So if you remember in bull put spread, again the same thing, we buy the ATM and we sell the OTM. So your OTM would be -2 or -3, whichever you feel is comfortable. So this is how basically you will take advantage of your backtested results and automate your option-based directional indicator strategies. So here, after choosing all this material, you will click on Run Live, and the position would be deployed. So this is basically how Key can help you automate your option trading strategies. You can view the logic behind this option trades in our previous videos. Thank you for joining us today.